Quick disclaimer, anything we discuss on this video, on this channel, it's not a financial advice for you to buy, hold, or sell any shares, ETF, or any investments. Please do consult your financial advisor before you make any investment into the stock market. Let's move on to the video now. Hello everyone. In this video, I'm going to share with you guys my ideas, why I added which ETF and what are the reasons behind it. So let's look at the ETFs that I have right now. HHIS is my one of the largest positions after Biggie, I should say the largest. And then HHISU, I had some US funds, so I have established that position as well, just because I didn't want to convert them. And then I've started MSTE, HDIF, HDIV, QQQY, SDAY, QDAY, HYLD, EASY, Easy, and HPYE. Then I have 3 metals: silver, gold, and copper, and then a gold coin. So I'm going to discuss with you about these ETFs, why I have these positions. Let me share with you guys some of my ideas behind it. So here's the screen from Harvest showing HHIS diversification. HHIS is diversified among all these 20 companies, and they are not equally diversified. In markets like now, it's a good thing because you have from Broadcom all the way down to Eli Lilly, you have about 7% of each. That makes 70% of the HHIS, and the remaining 10, they're about 30%, out of which most of these companies are towards the crypto. So as you could see, the exposure in HHIS is has been changed by the managers, or they've been adjusting it. That's one of the reasons, because these are the largest companies in the planet at the time, or you could say the strongest companies. Some of them they're growing, some of them they're actually holding very, very large positions. Moving on to the next position, which would be HPYE. I recently have started this. The reason why I like this, it pays twice a month. The other reason behind this is even though it has about 20 holdings, I like the strategy of this fund basically because this fund has covered call ETFs in both active calls and put, which means if the market goes up, they collect premium. So they do if the market goes down. So I think kind of it's a good fund to have a consistent income with having your cash parked at more stable. So let's see how things go. But I just started this position thinking about that in mind. Moving on to the next one, HDIF. This is my all-time favorite. Basically, this is how I started my covered call journey. Started with HDIF. The plan was to grow my portfolio to a size around $1 million, so I could have 10%. Based on 10%, I could have $10,000 a month income. So that was the whole idea about HDIF. I've sold quite a bit last year. I've moved most of my funds in higher yielding funds as well, especially in HHIS. But I still am holding on to this position. I really like the strategy behind it. It's very, very stable, boring, but very good, especially in markets like nowadays. It does not give you growling stomach. It is very, very stable. So moving on to the next one. This is one of my old ones, but again, HYLD. They've recently changed their strategies. I really like the new changes they have made. I mean, apart from their dividend yield, what I like most about HYLD is the new changes they've done. They have added SMAX, which is US Equity Yield Maximizer, QMAX, SDAY, financials, healthcare, technology, gold producers, energy, and REITs, so real estate as well. So it has a very good diversification, just like HDIF, but it is a little bit more dividend pair. That's one thing I like. It has a very good diversification for a larger portfolio for a longer period of time. Same thing with the next one, which is HDIV. This one is mainly focusing on Canadian companies. The yield is not that bad, but talking about it's actually doing better as the chart performs here. HDIV is doing better than the S&P TSX, which is Canadian top 60 stocks. Distributions are not bad, and same thing like the HYLD. This one has a very large it's very well diversified in different sections. As you can see, Canadian financials with maximum yield, energy sector, gold sector, technology, utilities, enhanced Canadian equity. We had enhanced utilities, REITs, which is again real estates in Canada as well. And then you have the Q Day, a small portion of that also has American companies in it, which is Q Day. So that is another reason of having a extra set of diversification. So this one is a completely game changer. S day and Q day. So S day, the S day is almost like holding on to the Dow Jones. So you could call it a very well diversified for the oldest, strongest companies on the planet in a way. And the one thing that I like good about this fund is that they have they have it leveraged about 25%. So that leverage part is where they're actually doing zero DOT, 0 day expiring options. So this way the basic fund stays stable. They're only doing options on S&P 500, but 25 portion, the leverage part of it. So the rest of the portfolio, it stays as a regular ETF. That's one thing that I really love about it. So next one is the same strategy as S-Day, but Q-Day. Q-Day, what they have done is they have largest, very large companies in America, like Broadcom, Nvidia, mainly tech sector. So you have a longer portfolio of these companies, as you could see. At the same time, they have done 25% of leverage on it. On the leverage portion only, QQQM, they are doing their zero DOT options on them, which is again the one thing the reason why I love it, because this 100% it's untouched ETF. Only the 25% on top of that 100%, they're doing their cover call strategies by using the 0 day options, 0 day expired options. The next one I recently started, which is HPYE. I think we've already spoken about it, so let me just move on to the Biggie. Back in November, my plan was to do swing trading with Biggie. The reason of my investment in Biggie was to go in and out, buy them low and sell them high. But with the market situation, I got stuck in this. But again, Biggie is paying consistent dividends. You're paying twice a month. That's a good part of it, and I know it's overlapping with the HHIS and with some of my other positions, but it's a good portfolio. It has a little bit of more leverage on it, about 33%, and that is one of the reasons it came down quite a bit. But that would be the same reason it might recover sooner than the other ones too. So I'm holding on to it. I'm still collecting dividends. So let's see how it goes. But so Biggie is something that I have in my next ETF as well, which is called Easy. So Easy has Biggie, Kenny, and International. So Biggie, as we already have it, I could probably sell Biggie if once it's recovered. Kenny and Inti is one of my main reasons to deploy more cash into into Easy, just because this way I would have more Canadian exposure along with my HDIV position, and then international exposure as well, because it has very good international companies as well involved in it. So next ETF we're going to talk about is MSTE. A lot of people talk about this. It is with MicroStrategy. It is quite a bit down. I started this position when it was around 430 or 450-ish. My average price for all the accounts right now around 407, and I'm buying it a little bit every day. So the reason why I buy this because, or I bought this or I started my position because of the Bitcoin exposure. I have some crypto in my portfolios as well. So I wanted to add this because one, I believe Bitcoin is going to go back up again. It's probably going to make a new high during this year or probably next year. So that's my belief. Let's see how things go. So I have started a position in this because the price is low, dividends are good. So that is one of the reasons I wanted to start in MSTE. Now, so other than that, I do have some crypto exposure through some ETFs or positions with Evolve. But this video is only about the cover call ETF strategy that I have on this Excel sheet. So that's all I wanted to discuss here with you guys. If you guys have any questions or opinion about my investment strategies, please share that in the comments below. I love, and if you like this video, please hit the like button, subscribe to this channel, and I see you in the next one. Bye for now.